Let me ask you a question. You own a home in Big Bear, and it's a second home. What does that do for you on your taxes? Find out today. Welcome everybody to our podcast.
Podcast?
It's a podcast.
No, it's not going to be available anywhere else except on an iPod?
I don't know. It's Spotify, YouTube, Facebook, Instagram. We handle it all. The number one, it's number one podcast. Before I really get started today, I wanted to make sure to tell Jacob, my son, 11 years old, you have been a big inspiration in my life. Thank you for being a part of my life.
Kids will do that to you.
Man.
You gotta be careful. This is James Morgan.
Johnny Wells.
And we are talking real estate with regard to your taxes and the new situations going on in 2019. And as of today, you can't file with the IRS, or did they open them back up?
Well, the 29th we'll be able to file our first taxes, so that's kind of a good thing going. But because there's so much going on, it's so weird. It's like a precipice of a perfect storm. Precipice. New word.
We're on the edge of a perfect storm.
Edge of a perfect storm. Because why? Because we are sitting there with new taxes coming in. We have.
I went to a seminar the other day, and there are a lot of changes.
Oh, yeah, and no government shut down. And so you got to wind up something right there with this changes, and nothing's really been approved. The new 1040 form is a little bit bigger than a postcard.
Yeah, it's tiny.
Tiny.
Kind of like a Form 200 or something.
Yeah.
Little tiny thing.
Little 10-liner.
For those of you that don't know, James Morgan, you actually do taxes.
Yes, I do.
You have some background in there.
Yes.
Share with us real briefly on this first show, because we'll be doing more of these, keeping you up to date with little snippets. So make sure you go down below, click the thumbs up, like us, and subscribe, and also click your notices. You never know when these things are going to come out.
Well, yeah, and like I said, we are currently in conjunction right now with people who are allowing us to file taxes for them. So,
wait a minute, a little bit of your background. Why would I want to use you as my tax guy?
Well, back in 2008, I decided I was going to go back to school and got my tax accounting degree in accounting, and then followed up with some CPA work, and I liked that type of work. And I got into real estate, kind of put it away for a while, you know what I mean? And now with the
they go hand in hand, especially in our market here in Big Bear Lake, California, which is predominantly a second home market. Things have changed for those folks. Let's start there today, and then we'll pick up on some other stuff for realtors later. Second homeowners, what's changed for me?
Well, the second, it's a big misconception. It's a big fear factor. It's only $250,000. That's it used to be $1 million. You could write up to $1 million of secured, financed property that is mortgaged. You could write
off the interest on $1 million home.
Up to $1 million.
Right, and now it's...
Well, now it's broken out to like your primary home, secondary home, whatever home it is. It's all encompassing now. So
it's one deduction.
One deduction, and it's only up to $750,000 now.
Combined. Primary and secondary, or thirdary.
Yeah.
Thirdary.
We'll
write in. Let us know if there's such a thing as thirdary.
Thirdary is a new word. I guess we should.
Thirdary.
There
we go. Thirdary.
So
as many homes I've got, I've only got one net deduction. $750.
$750 is the most of the
$750,000 for those of you that keep track of.
And that's a combined of the secured property. So if you have a property in LA, that's $700,000. You only have $50,000 worth of, and anything after that that is secured is now not. I
can't write the interest off on it.
Can't write.
What about? I've got my primary in my name.
Yes.
I've got a second home in my name, and I'm $735.
Yeah, you're fine.
Okay. And my spousal unit has a primary. She's letting her daughter live in it, but it's still listed as her primary residence. She's registered to vote there, the whole 9 yards. And her secondary, and she's got $560.
Yeah, that only up to the $750 will be
combined.
Is
that provided we file jointly? What if we file separately?
Well, then it's even less.
Say what?
Yes, it's even less if you file separately. It's now only up to $530,000
each if we file separately. So she could, I don't know, she couldn't get her 560.
But she can get.
Can we revalue the house and get the value down?
And that gets into a real estate question. Would you want to make your house worth less?
Sometimes.
No, you don't want to make your house worth less.
Why not?
Because reality is the home value of your house is not good to be going down.
Wait a minute. A couple of years ago, everybody was getting their house reassessed to lower the values. We got a guy that we know right over here.
Yeah.
They got it, in addition to clipping coupons, he got his house reassessed to a lesser value.
Boy, that's just a bigger picture because you're looking at that's a different prop. We're talking about Prop 9 compared to Prop 13.
Yeah.
Prop 9 allowed people for a temporary basis.
So you're trying to tell me this is another show?
Yeah, this is a way other show, but it's okay. We can keep talking about it. But the reality is that the second home, what really changed for people that scared a lot of people is the new 14-day rule. Yeah, well, the 14-day rule is what could really hurt people.
14-day rule.
Yes, if you rent your property out for more than 14 days, they're starting to grab things like Airbnb and stuff like that. So, okay.
But Airbnb is totally under the cover. Nobody knows that I'm renting my house.
Yeah, that's not true. That's not true.
I'm not paying taxes on it.
Of course, yeah.
I'm not paying TOT.
Yeah.
I'm not contributing to the community.
Well,
sorry, another show.
Another show.
Okay,
But see, that's why you got to keep
14
listening
days.
because we got so many topics to go over.
14 days. If I rent my second home more than 14 days.
And you don't stay in it at least 14 days.
Oh, wait, is it renting at 14 days or stay in at 14 days?
Both.
Used to be 21.
Yeah, they dropped that. So we got 14 days you have rented out, 14 days you must stay in it, or it's just considered rental property and you get none of it. None of the deduction. If you don't stay in 14 days,
but
it would have
the
to be
standard deductions, everything else went up. They're really trying to do
almost doubled.
I don't mean this to be a political statement, but for as long as I can remember caring about taxes, there have people complaining that we need to simplify the tax code, tax code, get it down so it's even, so it's equitable, so everybody has the same stuff.
Yeah.
Essentially, this is a big push in that direction, is it not?
They took a double of the standard deduction.
Thank you. We'll get your call in just a few minutes. Thanks for calling in.
We always having people asking questions.
I know. The phone lines, have litten up. Have litten?
Litten?
Litted?
Oh, that's two. You can't can't do that twice. Oh, it's like threes. Because in comedy, you got to do threes.
Yeah. Well, so we will get to your calls. Probably at the break, we'll take the calls, take your questions, and get back to you. So back to where you were.
Okay, so we got 14 days where we stayed in our property, and we rented it out for 14 days. It's still considered a second home for the owner.
So I can lump it into my 750.
Yes.
Okay.
But if you don't do the 14 days and stay in there, then it's considered a rental income property, which puts it in a totally different...
Now it's a business.
It's a business income. It's a different filing, different form.
We probably shouldn't say that because that is a different filing in a different form, different show. Business deduction.
Oh, yeah, that's a whole nother... that's where we can just go running down all that.
Okay, so what kind of records do I need to provide if I get audited? Because as soon as the government backs up, the audit offices...
Oh, yeah.
Going to be off and running.
Well,
all these new tax codes. Every time there's a little change in the tax code, audit percentages go up dramatically.
Well, that's where we're finding out that it's already out there. The data's already been mined. They already know. They have put so much into data scraping and data mining to understand that people are able to...
I'm just trying to see where Big Brother's watching from.
That's
everywhere.
Everywhere. It's all out there. So it's just better to follow it right.
Just do it right.
Because it's really simplified. It's trying to make it... It used to take something that would take hours to do. It has now become, for the average American, I have to admit, it's become very simple. You got your W-2, you put it in, 5 lines are done. Plus your... and now they've taken things away like your dependent care, credits. You don't have all that stuff. And they're taking away all the other loops and holes and lumped it into a standard deduction, which everybody kind of can figure on. Now, the things that are going to go forward, which would be another show, would be if you have 1099, who do you 1099 and not?
Everybody you paid over $600 to. Yes?
Yes.
Everybody.
Everybody.
The kid that cuts my lawn every week.
Well, that would be considered an in-home employee. So
No, not my kid. The neighbor kid.
no, in-home employee. Yeah, it's considered it was done on your property, and it's just like a maid now.
Do I have to have his immigration paperwork?
You would have to have all that paperwork together.
Yeah, got to prove that you keep the records.
Now, getting back to the records, I should keep the prevent an audit.
Yes.
First thing is
Well,
always.
you're not going to prevent one. They're going to do it anyway. You just don't. You want to escape with your life.
Yeah, you want to be able to walk out and with your head held high because you did it right. So the things that would be most beneficial is all your receipts, of course, keep everything. But more important things like your bank statements, because a lot of people nowadays are using their debit cards. Of course, those transactions are far easier to be traced, and you'll be able to use a lot of that. But still, the old-fashioned paper receipt is still, it's carte blanche.
So keep the receipt from McDonald's where I took the neighbor kid out for lunch as a bonus for doing the lawn and the edging.
Well, that's, once again, you get into meals and entertainment, and that was only up to 2%. That was changed to only 2% of your gross deductions. So if you...
My gross deduction?
Yeah, you only owe 2% of AGI. So you can't really use that much of it.
AGI, adjusted
gross income. Yeah, see,
if they're new to the show, they don't know this stuff. You know, if taxes get to be a bit too much for you, have you ever thought about just going fishing?
Yeah.
Right here in Big Bear, John Cantrell Fishing Guide Service, some of the best fishing anywhere on the lake. Let's take a quick update from John, and we'll be back with more taxes in just a second.
No matter where you are around Southern California, you're only a tank of gas, round trip in most cases, to an amazing alpine lake, Big Bear Lake, home to rainbow trophy trout. We're going to show you how to not only catch them, but local guide legend John Cantrell is going to show you how to think like a fish.
Tune in to Good Day Big Bear every week and catch the freshest update from John Cantrell. He'll tell you not only where to catch the fish, but what they're biting on, and show you tips and tricks on how to make sure you get your limit every day right here in Big Bear Lake, California.
The worst day of fishing beats the best day of anything else. We'll see you at the scales.
So, just a real quick wrap up. James Morgan, tax guy. You actually have, because nobody knows you're a tax guy.
No.
So you're kind of a stealthy guy. I can tell you almost blend into the background
here. See,
you just don't exist. So you're just a big talking head.
Well, the good.
But you have.
This is your tax man.
But you have some openings this year.
Yes.
Are you available for consultation?
Yeah, I'm available for consultations. I won't be able to do anything really till after January 29th, because that's when the government's actually open. But yeah, I am open, but I primarily do real estate brokering. But this time of year, I always get questions from past clients.
You just have fun.
I do. I love it.
You just have fun doing that.
I love it.
Got a big old calculator. One of those goes. James Morgan, how do we get in touch with you?
You can reach me at my website, of course, exitrealitybigbear.com, or call us here at the office, 909-878-0522.
Very good. So after you get back fishing, get your taxes done.
Get
them done early. It'll behoove you. We'll talk to you again shortly. Again, subscribe below. Give us a thumbs up, and give James a call. We'll talk to you later.
Thank you very much. Have a great day.